level's not that bad. It's
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice.
GM, welcome back everyone to another episode of More Than Speculation. In today's episode, we have Level USD. Is that the right way to pronounce it? We have Kedian, if I'm pronouncing your name right. I don't know if it's K-Key. But yeah, man, let's jump right into the rapid fire questions first.
Sorry, is it Kedian or Kedian? All right. My Asian ass can't say that. Can you ask, like, where does the name come
from? It's actually a Chinese name. So, I mean, are you guys Chinese or you speak Chinese? Yeah. It's Kedian in Chinese, but my Chinese is shit. So let's stick to English.
I am ethnically, but I can no longer speak.
Yeah, basically the same here.
Nice. Okay. Rapid question: community, tech, or token price?
I mean, they're linked, but it's community.
Okay. Community tech token price or community token price tech?
I would say community token price tech.
Okay. What's the best PMF in DeFi so far?
I think it's lending protocols.
100%. Is points good or bad for DeFi so far?
Or it's just yes or no, basically, good or bad.
Okay.
Or something super quick. Yeah.
I'd say good.
Were you a UST enjoyer?
Yes. Am I? Like, do I enjoy US dollars?
Were you in UST before?
Oh,
Luna.
No, I was not.
Yeah.
I was. Yeah.
What was the most bearish thing for you the next 3 months?
Oh, I don't want to be too controversial. I think it's a lot of these new chains.
Ooh, spicy.
Bro, you're not going to be able to get incentives. You can't get incentives from them now. Shit.
No, I won't name which ones. I love some of them. Just bearish on some of them. You have to guess which ones.
No, man. Thanks again. Thanks for jumping on. I think we should get started like right away for our audience. Who are you and what is Level?
Yeah, happy to provide a bit of background about myself. So I'm Kedian. It's personal information. I'm originally from New Zealand. Moved to the US for college. My background's in finance, so I studied finance, worked in investment banking, and then worked in fintech for a few years before starting in crypto in late 2021. So it's been more than 3 years. I got involved in crypto earlier. Like I think, like a lot of people, just heard about ETH in like 2017. Still holding that bag, unfortunately. But that kept me in the loop from like 2017 to late 2021. While I was working in more traditional industries, and then kind of went deep into crypto at that point. So we've actually people don't like to talk about pivots, but we did start with a different project. Made a few pivots, and then this version of Level was actually only started last August, and so that's I guess right around 6 months now, or a little bit more than 6 months. And
interesting.
So, Level
I'll ask you more on your pivot later. On your pivots, but what is Level?
Happy to talk about some of those and like the learnings. Also, apologies, I have a bit of a cough. So I can, in terms of Level, Level is like a stablecoin protocol. We issue Level USD, which is actually an extremely simple stablecoin. Basically, you can mint it using USDC and USDT. That forms the reserves. And then what we do is earn yield on those reserves. And specifically, we put it into lending protocols, which is why I'm also super bullish on lending protocols. I think it's one of the things in DeFi that has the most product market fit. So what this means is, effectively, Level USD is backed by the lending protocol, like receipt tokens or LP tokens. Generates yield from this, very trusted, at least I think, at least for now, like very trusted source of yield on chain. It allows Level USD to be fully transparent. It has like minimized centralized counterparty risks, and actually has a very interesting yield kind of like structure. And so the way, so the protocol generates yield from lending protocols. We pass it back to staked Level USD, which is the equivalent of, USDE or like SDI or SUSDS. It's very standard 4626 mechanism. And yeah, that's essentially Level's product in a nutshell. We've grown very, very quickly this year. I think we just hit 107 million today in market cap, and then already integrated with protocols like Pendo, Spectra, Morpho, and then I think one of the things is, despite kind of this very low risk source of yield, the S Level USD APY is being very interesting. It's like outperformed most of the major yield bearing stablecoins pretty consistently for the last 3 months. So I think that's kind of like the 2-minute overview of the product and our traction.
So I'm going to try to summarize it in 2 rounds. Basically, you aggregate yields from various lending or various yield sources and then merge it back into Level USD, essentially.
Yeah, you can think about it that way. Yeah.
What are the factors, or how would you move these strategies around? So, because essentially you're a bit like a yield farming as a service with a stablecoin for people to just hold it, right?
I think that's one way to think about it, but it's the strategy is not very complicated. Right now, 100% of the reserves are put into Aave. We do want to diversify to Morpho pretty soon, and then eventually other more like trustworthy lending protocols. And the concept here is to keep the risk as low as possible, as low as it can be on chain, which once again we believe is lending protocols. And so even when we do diversify to Morpho, it will be like the prime vaults where only the blue chip collateral. It's only vaults with like blue chip collateral, and so it's honestly like there's nothing too proprietary about how we allocate, because there's not too many options in the first place in like the risk profile that we're looking for.
Quick question just on the product side still, like what's the connection with like restaking, or because I feel like I've read somewhere that you're also in that game. Can you expand on that just a little bit more?
Yeah, maybe I should have touched on this in my description. So actually, when we first started this form of Level in August, like I mentioned last year, we initially thought that restaking would be a very interesting source of yield. And so what we were doing, we would like the lending protocol yield was like the base yield to cover opportunity costs, and then the idea was to restake the lending protocol receipt tokens into the restaking protocols to earn additional rewards. So it's kind of us being able to stack 2 layers of yield or rewards on top of each other. We started doing that with Symbiotic with a small amount, but I think what we realized is, at least for now, there's not that much. I think the risk of this additional layer of smart contracts isn't quite worth the rewards that we're getting, at least for now. I think in the long term, I'm still, at least I want to be bullish on restaking. But I think while we were like in the last 6 months, we almost accidentally discovered how interesting it is to actually have this very simple source of yield and just focus on lending protocols. So there is still this like a little bit, very small proportion of the restaking part, which is probably what you've seen. But we are kind of at least temporarily deprioritizing that and just focusing on lending as the main source of yield.
So I'm actually a user of your protocol. So let me just talk a little bit through, and maybe you can correct me as a user point of view, right? So for me, it's like, let's say if I come here, I can enjoy the staking APY of, I can stake the LVUSD into SLVUSD to enjoy these APR. If I want to be more speculative on your points, I can deposit in various of these kind of pools to enjoy different points pools from different sectors or ourselves. The reason why the yield can be interesting is because of the multiple points discount you can get, multiple points tokens you can get from Pendo, etc., like the typical DeFi skill. And before, I'll ask you a little bit more later on, but like I would love to know some more of the farming strategy. But would you say that's like quite of the overall of the product?
Yeah, pretty much. I guess like the very first step is getting Level USD. That's on the buy tab on the left. So this is where you get Level USD in the first place. The front end actually routes through Curve or it mints, depending on what site. Basically just like whatever actually is more favorable to the user. And then the 2 main things, you either stake for yield or you use it in other DeFi protocols, or you like deposit it to farm XP.
Yep.
So it's the same concept, right? Like, so oh, if you only have level USD, you're not getting yield, and then the one that has like the one that's staked has yield. So like in a way, this is like a very popular construct these days, in which like one cohort of the holders let go of the yield. Maybe they can get the points, or they can just use the stables, and then the other cohort get a much higher yield because of that.
Exactly. Yeah. So which is why, obviously Aave yield has been sub 3%, but here you can see the APY is close to 7%. Although this is a historical number, just to clarify. But yeah, that's exactly it. It's like, people who don't stake essentially subsidize the boosted yield for the people that do stake.
Yeah. Just to highlight for the users, basically what happens is you can decide on the real yield, because so let's say you have $100 totally in LV in Level USD. If you don't stake it and opt for points, you will not get a yield. But if you stake it, essentially you'll get, like, let's say out of the $50 at stake, you still get 100% of the yield. That's why you can get a higher yield. It's like moving the yields around depending on what you do, on the speculative or do you want a hard yield.
Yeah, it's actually a little bit of like it's kind of like native yield trading within like the Level platform, which I think, like I mentioned earlier, this is the same mechanism that Athena has, where
Yes.
USDE is just like pegged to the dollar, and then and you can earn points with it, and then SUSDE is when you stake it to earn the yield. Although we make it like almost a little bit more extreme, because I believe, I'm not sure if they still do, but with SUSDE you could earn the yield plus like a 1x points, or like 1x of their points previously. Whereas like we give no points for staking S level USD, for staking to get S level USD, which basically just allows us to segregate users between real yield earners versus like XP farmers. And if you do want to do both, you can just split your portfolio, right? You can stake a portion, farm a portion, but we sort of segregate that very clearly.
Nice. Okay, so what do you think are the North Star metric to grow a stablecoin, or maybe just for you or overall in general?
Mm-hmm.
Is it market cap?
Yeah,
Market
I
cap,
think
volume, or integration?
I mean, if I were to rank those in our current stage, or in the early stage of a stablecoin, it is market cap, and I think then integrations, then volume. But I think as a stablecoin grows, and when I say grow, it probably has to be at least $1 billion plus, where this like starts to change. Then it becomes, I think, it's still, volume and integrations I think are related. Like the more integrations you have, the more volume you have, and then market cap can. It's like, if I had to pick, then that's like the ranking. But stablecoins is like a scale business, so market cap is always very important. And I think there is kind of like this feedback loop between these factors that you mentioned.
Are you thinking of your product as like you're gonna try to compete more on the yield side, on like the TradFi side? Like, how do you see, I guess, like Level itself in like a slew of like stable coins out there? Like, I'm sure you would have to like pick a certain focus. Would love to hear a bit more about that.
Yeah, I think similar to the question before, I think it depends on the phase, like the growth phase of the stablecoin. I think when you're in that scaling phase, to get to a certain size, and size has a few. There's a few reasons it's important. One is like it allows for potential liquidity, and then I think other is actually just like general credibility and like trust, because people don't trust stablecoins unless they're like a certain size. So I think in the basic, I would say it's not like an exact cutoff, but I would say definitely from 0 to 1 billion, the focus probably is yield and integrations. That's kind of what attracts users in the first place. It's incentives at the end of the day. And then after that, it's, it's every stablecoin, it's their job, I think, to find use cases for their stablecoins. We do have like a pretty specific strategy, but it is something that we are, we're thinking very deeply about it. I don't want to share too much because, it's kind of like, we also need to get to like that. We're at 100 million now. We need to get from like 100 to 1 billion before I think we can really execute on that. But yeah, the idea really is to just try to create more use cases. I think my background is more in like TradFi and fintech as well. And so I think I do, lean towards real world use cases of stablecoins. And stablecoins is like it is this like a very innovative type of asset that can solve a lot of problems in traditional finance. So that's kind of like probably the direction that we want to solve for.
Normally I would ask you to tell me because that's just the person I am. But like, you're a very nice person. I don't know why I don't feel like I'm pushing you too much today.
I think pretty crazy time for the industry. To be honest, I never really paid attention to stablecoins that much before. But I think when shit like that happens, you start looking into, you just start learning about this type of stuff. And I think despite that, I think very negative event for stablecoins, me and my co-founder, we built up a lot of conviction that there is like a lot of use cases for stablecoins, and we actually started, basically did a very hard pivot into the space. And since then, we've tried a couple of different, just experimented with like a couple of different stablecoin models before Level in its current form. So the first was treasury-backed stablecoin, kind of very similar business model to Agora USD, if you guys are familiar with them. So the idea is like treasury-backed, you use the treasury yield to pay distribution partners, and these distribution partners try to create adoption like for your stablecoin. What we found was we initially focused on DeFi, and so I think in DeFi, even in a bear market, people don't really give a shit about 5% yields. It's just like not juicy enough to incentivize people. And then we didn't really go for institutions, but we did try more like just like fintech apps that were using stable coins. I mean, we did try institutions a little bit. Basically, we just couldn't really break into that. I think with Agora, it's founded by Nick Van Eck. My last name's not Van Eck, and so a little bit more difficult trying to hit those institutions. And so essentially, we still think it's an interesting business model. We're really kind of like really rooting for Agora and interested to see where Nick takes the company. But I think it just wasn't like the right product for us to take to, or like the right business model for us to take to market. And I've done a lot of talking. Actually, I can pause if you guys have questions.
No, that's good, man. I was just gonna say you're so nice the way that you're describing these things.
So now that I really want to know, so what do you think? What use case do you want to put into stablecoin? Like maybe I can throw a bomb first. Like, so I think the biggest use case first is yield farming as a service, and then you wrap essentially most vault protocol, whatever, they can either issue a CDP or they issue a stablecoin and do a trust me bro thing that I'll do for you, and you can somehow sell liquidity. The key is to make sure there's enough liquidity that people trust the stablecoin. And Athena, what they did was they was able to add on a lot more use case. Let's say use collateral to trade, use collateral to farm more things. But on top of that, it's very hard, right? Because it's gonna be very hard for people to just to hold Level USD, let's say, to spend or to trade. Like I'm very interested in the stablecoin place, but I don't know whether you can either opt in for better yields or opt in for better use case because it's almost like dominated already.
Yeah. Actually, do you want me to finish one last pivot, I guess?
Yeah. Sorry.
I sort of just stopped myself in case you guys had questions about the pivots. And then we spent a little bit of time experimenting essentially with an Athena competitor. It was actually quite similar to Resolve's models, kind of like it was like basically internalized tranching. But yeah, otherwise, we've since then we've obviously seen like a ton of Athena competitors, and then we last August switched to Level in its current form, and then to answer your question, I would say that there is, I think you're right that at least yield farming is one very important case of stablecoins. I think it's like especially in DeFi, it's almost like the easier one to pursue. That being said, I think there's actually there's kind of like a problem for stablecoin to position themselves as like a yield earning opportunity, and the reason is because it's a race to the bottom. When you are a yield bearing stablecoin, even at scale, you actually have to pass back pretty much all of your yield. So there's very little net revenue for the protocol. And if you actually think about this in TradFi terms, it's kind of like the equivalent of a mutual fund, and like a pretty shitty mutual fund if you think about it. Because mutual funds are good businesses when they're really big. And like which is kind of what, and Tether and Circle essentially are mutual funds, but they're good mutual funds because their margins are extremely big and they have a lot of scale. but that's also because of the network effects they've created. But then if you go to the next biggest stablecoin, which is like, Maker or Sky or whatever they call themselves these days, it's $8 billion stablecoin. It's essentially like a yield product, right? It's like a very, in TradFi terms, it's actually a small mutual fund. And they have to give a lot of the yield away. And I think that's kind of, I think makers as in like, they're OGs in the space, and obviously a lot of respect for what they've done for DeFi. But the project in its current state is, it's reflected in the token price. Like, despite being the third biggest stable coin, they have this approximately 1 billion FTV, which is, 1 billion is not
like, I want to. Oh, I think we lagged a bit.
But yes, I think my internet cut out for like 2 seconds.
I think you're back. Yeah. I think you were like talking about like how Sky has to give back a lot of it, so it's kind of like a bad mutual fund. And yeah.
Just to be clear, I don't want to say Sky is bad or like
of course.
I say Sky is bad, yeah, but why do you think
I was just saying that I think because of the fact that despite them being the third largest stablecoin, they're essentially a yield product, and so since they have to pass back most of the yield, there's not actually the business model is not like great, which is sort of reflected in the token price.
Got it.
And so yeah,
and it's less sticky as well, right?
Yeah. So I think what was that? What'd you say?
It's less sticky as well because it's the in and out is so easy. It's almost not as good, and then the performance is very flat. It's a bad service. It's easy to push out money and lose money at the same time, right?
Right. And despite the size, it's kind of like, I'm not sure if, do you guys actually use DAI or USDS other than for savings? Like, do you actually use it?
Not me.
Back in the days, you used to get liquid, basically, like actually borrow.
Yeah. But now it's kind of like, I think it's basically treated as like the savings product or one of the savings products on chain.
Yes.
Yeah, especially since they changed their like most of the collateral to Ethena. So yeah.
Right. Yeah. So I guess what I'm trying to say, it's like a long answer of, I think yield is important for initial growth, but it's like important to find use cases beyond yield for a stablecoin to be a very valuable business. And stablecoins have the potential to do that. I just think very few of them very few new ones have captured it. You can see, I think Athena, they're doing an amazing job. Like, and the reason they're building all of the stuff around Athena is because you have to build like a platform and ecosystem that captures that. It's like kind of like a captive audience for your stablecoin. So I think that's kind of like the right direction of how stablecoins should think about scaling beyond like the $1 billion mark.
Okay. Very interesting. Like, there's actually a lot more questions I want to ask you, but maybe we can do it for the next session just because time is here. And I do need, for the clickbait purpose, I do need to ask you a bit of alpha for our community. Okay. So what's the best strategy let's say I've never touched Level USD right now. What's the best strategy I can use to start speculating on it now?
Yeah, so as usual, not financial advice. I can't really recommend anything in particular. I guess I can tell you what people have told me they like to use Level USD for. So I think the one that's most popular is using it on the yield trading platforms like Pendo or Spectra, because you can, especially with staked Level USD, you can lock in a pretty juicy fixed yield even now. I think it's been consistently one of like the top few fixed yields on both platforms. And then there is a 40x XP multiple. Oh, no, sorry. For PTs, I lied, there is not. But then you can, if you hold YTs or if you LP, there is a 40x multiple. So I think that, and just in terms of pure numbers of if you care about yield and points, which I think is kind of obvious, that's what people care about, that those are the highest numbers. And then there is also providing liquidity on Curve. That's also 40x XP.
Actually, I haven't. I'm a casual user, by the way. I just found some stable coins around, so I deposited it. Like, have you guys have you guys announced your tokenomics or like total points or any like something that can pin down a little bit of the valuation or number of tokens by any chance?
No,
you can say no. By the way,
Yeah,
Yeah.
we genuinely haven't. It's not even just me saying no. Like, I know this. I don't know. Actually, I don't know what projects usually say at this stage. So I'm not sure if this is cliche or not. But we genuinely are focused on growth, and this is growth in both market cap as well as community. And because, like, yeah, we reached 100. It's like it's a good start, but in the grand scheme of things, it's kind of like it doesn't. There's not much. Like, it's not valuable at 100 million yet.
How
So yeah.
Understood. Oh, bro, I wish I've spoke to you earlier. Actually, made me feel a lot more comfortable and confident. And like how open you are. Even though I didn't get any extra alpha from this call, but like I feel like how open you are made me very comfortable to put more money in.
Right.
Yeah. That's why we started this podcast. Actually, like it was like, oh,
Yeah.
why do you have the guests around? We just get them to come on and just speak in public. But yeah, like so, what's next in the next month or 2 months or so, or something like that for a level?
Yeah, I think we're at that stage of just continuing to do what we are doing now, but doing it faster and better. And so I guess that there is going to be a product development. I think I might have mentioned. So right now we're putting everything in Aave. I think hopefully by middle of next month we can start allocating to Morpho. So this is a more diversified yield. Yeah, just like more diversified yield generation. Morpho on average just is a little bit higher in terms of yield. And then it's really about growing, just like growing market cap as quickly as we can, kind of building up, like continuing that momentum. And then aside from the actual product, it's really focusing on like growing the community. But the two are obviously quite closely tied because when you have good growth and good traction, community gets more excited as well. And yeah, I think it's actually nothing. Nothing's too crazy is coming up in the next 1 to 2 months. That's like very different. It's just about like trying to make the chart go like up to the TVL chart go like up and to the right.
Nice. All right. We do you have any questions for us?
I mean, what alpha do you guys have? Like, what is actually like? What are some other interesting stable coins, like opportunities that you guys are seeing right now?
Do you want me to go first or not?
I can go first just very, very quickly. I think a lot of people are going out the risk curve and finding more yield. I mean, like right now, what you're doing is mostly like on-chain yield. I think the Solana PayFi thingy is yet to be seen if it's going to be successful, but it's interesting how they were going to mix that type of yield with on-chain yield. So I think that's like the big theme on the yield side.
I am more of a speculator. First, I don't believe in PayFi right now, just because I think the value capture will be very low. I think for you to build into a stable coin that end up people holding and using like USDC and UTD is very difficult. So I try not to take positions or farm those. I like to farm protocols that might be dominant on one chain. For example, like Solana doesn't have a native stable coin yet. So that's why Marco and I are farming Previa. I still can't say the name. I don't know why people come up with such weird names.
Perena, bro, Perena.
Perena. And then obviously I'm a big fan of Athena stablecoin because I truly think that's a very crypto native use case where you can use USDE as collateral to perk trades on centralized or decentralized perk decks. And I believe they have done a excellent execution on bringing in use case for the stablecoin. But I'm also interested in doing all sorts of new things. For example, like you guys, like a yield-based stablecoin that can be add on other interesting stablecoin use case, essentially. And real world asset, I kind of like, but I feel like the number of stablecoin you can squeeze out of it, not so much. Phantom might be too DeFi native, and Bera as well, but it's good to farm while you hold it, kind of thing.
Nice. And what's the
You shared a
what's
lot
like
there.
the reverse? What's the reverse alpha? I guess the question you guys asked me, like, what are you bearish on?
Oh, like I can start on this actually. Like maybe it's more of like a meta thing. No, like with Fidelity launching, Tron launching its own stablecoin, as a VC, I think we need to continuously underwrite what does it mean when a 1 trillion asset manager can launch it and squeeze the fee to zero, basically, right? Like how do we underwrite that as an investor? Maybe it's also like a question for like people like you guys, like the founders. But I'm a bit concerned it's getting too commoditized, and you need to like find really interesting modes to stay profitable. Yeah.
Yeah.
Bearish on investing in general for the next, let's say, 2 to 3 months, just because right now the only way to make money is to long crime-fi or to long highly small cap things that will move. Just because we're in between trends, basically. Like back in the days, the trend was to invest in VC projects in a very early stage and then trade the token while it's low float, right? And then it went straight into just trade memes, fuck the float, all the thing. And right now we're in between of the battle of the trends. So like, there's no clear way of making money other than farming incentive. So it's just bearish because there's no clear direction in terms of how to make money.
Bearish investing means bullish stablecoins. So
yes, I agree.
Well,
Yes.
That's why we went down the list of stablecoins. I want to talk to everyone, like Marco and I, basically.
No, I think if anything, it's actually nice for us to be, because it's like when the market's good, obviously stablecoin yield is the most boring thing, and so the attention's not on this on what we're doing. Whereas now it's kind of like there's just less noise in the bear market, and it's actually like the time for stablecoins to shine. So we also just like want to take advantage of this time to grow very quickly.
100%. I think stablecoin is the way forward right now. Closing questions. What is that one thing you need to make it in crypto?
Let me think. That's caught me off guard there. What do you mean by make it? Like just make a shit ton of money, or like as like a user?
However you want to read it. However you want to read it.
I would say, I guess, I think it's just like sticking around. I think like staying alive is extremely important. Yeah.
No, that's true.
Yeah, I think it's like whether you're an individual, trader or user, or like if you're a, founder, that's really important because, we, like I said, we started in the last cycle. There were a ton of projects that raised, and I think a lot of projects died. They literally just couldn't stay alive to, take advantage of this cycle, for example.
Yeah, and I respect the fact that you pivot so many times, and actually, you I feel like you have explored most of the yield bearing concepts, like from doing two trans, from doing like high yield, and then stablecoin and everything. Like I don't think most builders have been through as much as you, pivoting different types of things as much as you.
Yeah, I think it's like pivoting is like viewed negatively a lot of the time, but it's like if you learn from it, actually, like I think we've learned a lot from the stuff that hasn't worked, and I think people don't really, if you're not a founder, if you're not really in the space, early stage space, it's like you don't really think about that stuff.
100%. I think you have to pivot in different space. If you have to grind, you know more than most people. Like from DeFi, GameFi, NFT, meme coins, like everything has something to learn from it in terms of launching project or trading it in some sense.
Yeah.
All right. Thank you for your time today.
Yeah. Thanks so much, guys.
Thank you, sir. Until next time. Cheers.
Yeah. Have a good one. See ya.